Alright, welcome back, guys. Let's talk about the markets and current events. Whatever's basically on my mind. I'm just going to freestyle it on this video. So, for everyone in the in the newsroom, check it out. You guys know what I'm talking about. Look at that. I got a cold steel butler. an old little I think they called them punies, like a little shield. Anyways, I started punching the heavy bag with this. It really is good self defense. It'd be hilarious if you use this on someone. I'm telling you though, if this thing hit you, it would knock you out instantly. You'd lose all your teeth. Anyways, I'm gonna keep this in my car. Maybe buy a few more and put it around my house. I don't know. I also bought a shield. It's made by the same company. I don't know. Just I'm literally gonna go into the parks and start swording with all the other nerds. Maybe I'll start up a new hobby. I mean, of course, every room, right? Gotta have a little something. So that's more lethal, just in case. But yeah, I think that's hilarious. If you're not in the newsroom, then you don't know what I'm talking about. Because I post some weird stuff in there sometimes. I don't know. Sometimes I feel like sharing stuff with you guys. Anyways, let's talk about the markets and the news and whatnot. First of all, not financial advice. Consult your licensed financial advisor. I am not a licensed financial advisor. This is more of an educational channel, learning how to trade, listening to me and my opinions, and me ranting and talking about things. And I could be completely wrong. No one's ever right. And stops in place, emotions out. Have your emotions out. And do not invest anything you're not willing to lose or lose sleep over. It's all risky. All of this is gambling. All right. So, okay. Everyone's seen the videos. I posted a bunch of videos in the newsroom. So yesterday, was that yesterday? It looked like, Lebanon was hit with a nuke, okay? I'm not saying it was. I'm just saying it looked like it, right? The first 12 hours or 6 hours, nobody knew what was going on. But it looked bad. It looked really, really bad. What did the market do? Let's take a look at the NASDAQ. What did it do? Did it even dip? Did it correct anything? Well, it just went up. It just went up. It didn't even care. It didn't even dip. It didn't even fall. It went up. I mean, how irrational is that? I mean, it looked like... I'm just saying, nobody knew at the time. It was definitely not a, yes, maybe a fireworks store did go off and start it, right? By the way, I just posted in the newsroom what was the cause. But it's still up in the air. There's a couple videos going around. I don't know. Okay, I'm just going to say that. I don't know. But when it was happening, what did it look like? And the market just didn't care. And do you know the ramifications of what, if it really was what it looked like? What the ramifications of that is? And even Trump said that his general said, yeah, that was that was something else. It was, missile or bomb or something. But anyways, the market just didn't care. And stuff like that. What if it was, right? I mean, it had like a mushroom cloud. It could have been a small one, like a tactical. I have to be careful of the words I use, but I don't know. It could have been a tactical ook. Ook. I'm going to leave out the front letter. So that's what it looked like. And the market just didn't care. They're like, oh, well, whatever. It's over there in Lebanon. I mean, who cares? I don't know, guys. It just, nothing makes sense anymore. The fundamentals, I mean, yeah, some of the FANG stocks had some good quarterly earnings. But, for like Apple, that was 2 quarters ago, because it's weird how they use their quarters. Apple's first quarter is like around October or something, so it's off. But this is the Nasdaq we're looking at right now. This is a 4-hour chart of the Nasdaq, and it didn't even dip. It rallied on that. Not just on that, it rallied on. Okay, so first of all, with these unemployment numbers, okay, some unemployment numbers came out today. They were really bad 2 weeks ago. They're still bad. But, so the market has expectations. Expectations. We only expect something like 1.4 million to lose their jobs this week. So if only 1.3 million or 1.4 million lose their jobs, it doesn't beat expectations in a bad way, then the market just rallies on that. Okay, so just think about it. Just because the market expects 1.4 million to lose their jobs, and let's say it's a little less, that doesn't mean that it's not really, really bad news. I mean, the fundamentals, the economic numbers, the negative, what was it, 33.9 GDP quarterly. I mean, the market just keeps going up. And I know everyone's like, yeah, but don't fight the Fed. Stocks only go up. Nothing could stop this. Okay. So what you're telling me is, besides the retail investors, Wall Street, the smarter people, well, supposedly, basically everyone investing right now, not everyone, because there's a lot of retail investors who have no idea what the hell is going on. They have no idea. But the people who have been trading for a living and investing for a living, majority of Wall Street, majority of people in the markets, should have some idea of the fact that the only reason the market's going up is because of the Fed, is because of the burr machine, right? Because they're printing money. So the damn the fundamentals and the economic data and the forward-looking PE ratios of pie in the sky. I don't know. I'm telling you, nothing makes sense anymore. So you're telling me most of the people in the market think that the Fed could literally just keep printing and the market's just going to keep going up forever without any correction, nothing? Because that's what the market has literally been thinking for the past 3 months. Basically, it's a confidence game, and the people in this rally, the bulls, all the bullish people in Wall Street, think, basically they have to think and believe that the Fed has everything under control and they could just keep inflating the bubble and it won't pop. And just think about how risky that is. Okay? And these FANG stocks, they're not safe haven stocks. Just because people are using, Netflix more and social media more because they're at home eating, junk food, watching TV. Anyways, let's look at the weekly chart on the Nasdaq. This is stupid. I mean, this is incredibly stupid. Look at that. Anyways, what else did I want to talk about? So the unemployment data today, I mean, it was bad. Any way you look at it. Some expectations were met or not beaten for unemployment. But tomorrow is the big unemployment numbers, the U6, and all of the. Let's take a look. This is the newsroom. Look at that bird. This is the stuff you guys get. If you don't appreciate this, that's a real bird. Alright. Tomorrow we're going to get... Or no, these were today's numbers. Initial jobless claims. So consensus was thinking 1,415,000 jobless claims. Oh, look, it was below that. So it's green. All bulls. How stupid is that? 1,415,000. That's 1,000,000.4 was what they were expecting, but it's only 1.1 million jobless claims came in this week only. Unreal. Tomorrow, this is going to be the big one, right? So non-farm payrolls is the big one. Unemployment rate, big one. But down here is going to be the participation rate. That's what I like to look at. Private non-farm payrolls as well. Tomorrow, if there's a huge miss, meaning if the actual numbers are way worse than consensus thinks, the most people expect, the market's going to dump. It should dump on that. But my TA is telling me, technical analysis is telling me, we're ready. We're ready for that correction. Now, I know I've been wrong for about a month now. And I've paid the price, guys. I've had a lot of call options on inverse ETFs and puts expire and or come close to expiring, that expire next week, and they're down. I mean, I shorted Apple and it's down like 99%, and it was a big position, so I can't always be wrong. All right. This was really good. You should watch this. This guy, he kills it on Twitter. And you know, okay, so I don't talk about this because I just, I focus more on the mining stocks, but economics wise, if you weren't around, let's say from 2011 at least, you don't see the big picture. Or I would say since 2007, 2008, if you weren't around in markets before 2008, you don't see the big picture of why everything's playing out the way that it is. Real quick, Janet Yellen, the previous Fed chair, and Bernanke, prior to her, they promised that they were going to be able to normalize interest rates. And that's why eventually gold and silver sold off in 2011 or 2012 and 13. 2012 and 13. And everyone's inflation expectations just went away. And we really didn't have really big inflation. Nothing crazy or anything in the past 10 years. We still don't really, but, it's coming. And that was because the central banker, Yellen, Bernanke, even Powell, back in 2017, 18, 19, they all promised that they were going to normalize rates. The first rate hike was in 2000, at the end, it was like December of 2015. What happened in the beginning of 2015? Let me show you. Well, you know what? We could look at the NASDAQ, but it's not that great of a... Let's go back to 2015. All the way back here. So first rate hike was right here. See that? It was right here. Let me zoom in. Now these moves are so much smaller compared to today's moves because that's how insane everything is right now. First rate hike right here. What did the market do? It dumped sharply. And then they stopped hiking rates. They just talked about it. That's forward guidance, what they call forward guidance, which is we talk, we speak, the market listens and tries to anticipate things. And then they just said, well, we're not going to hike rates for a little bit. Janet Yellen said. And then look at the market. Just shot straight up. Orange Man was elected, like around here, right? In 2016. There was this sharp drop. And then the market just went on a year going straight up. And then Powell started hiking rates in 2018. So we started seeing some volatility in the markets, right? Here's some volatility. But for some reason, 2018, yeah, 2018, we started seeing volatility because Powell kept hiking rates. They weren't anything significant because we were going from 0 to like 2.25%, which is nothing. I would say in the normal world, it's minimum 8%. That's what the Fed's funds rate should be. But it caused volatility in the markets because they didn't like that. Because if you raise rates, what that does is it kind of sucks money out of Wall Street and the system. And people can't take consumers can't take on any more debt because rates are higher. They can't take on more debt, so they stop shopping and buying homes and cars and crap. Anyways, but then Powell said, all right, we're going to ease off on raising rates. And then they started doing the repo stuff, right? Now we're going into 2019. Well, this is still 2018. Yeah, okay. This is still 2018 right here. And then we get a sharp drop towards the end of 2018. And that was after Powell's been raising rates for a while now. And then right after this sharp drop, what happened? Well, we had repo. The repo operations started. But then Powell said, all right, we're going to stop hiking rates. And they started cutting rates again, right? And doing repo operations. So in the beginning of 2019, the repos and the cutting of rates juiced the market back up. This is the beginning of 2019. And then obviously the pandemic happened, which I called a month early, and we shorted it, and it was awesome, right? And it also gave you the biggest buying opportunity ever in mining stocks, right? So this was the sell-off March of 2019. Or no, 2020. For some reason I was thinking we're in 2019. I'm sorry, guys. I don't know why. Anyways, but 2019 was awesome, right? Repo operations, and they started cutting rates and stopped cutting rates, right? But then all of a sudden, in the beginning of 2020, we had the pandemic. And I was calling from like December of 2019. I started saying, listen, guys, we're going to get a huge correction in the markets. And that was right before I even knew about the virus. And then that finally hit. And then it was the perfect black swan event. And I warned you guys. I called it. Before anyone else, by the way. I swear I was the very first. All right. And then what happened? QE infinity happened. Right down here. They cut to 0, the rates. And ever since, we've been on this wild ride of utopia, or I have no idea. I mean, this is unreal. This will be in the history books of this rally right here. Okay? By the way, today the NASDAQ closes above 11,000 for the first time ever. Isn't that crazy? By the way, this chart I was just showing you guys, this is the NASDAQ. All right. Now listen. I could be wrong, right? But this has to lose momentum. I mean, eventually you run out of buyers. Okay? You just do. And it would make sense, and I said this in my last video, to at least retest the previous high on the NASDAQ, bare minimum, or there's major support around like 8,300 on the NASDAQ, right? Now, whatever the NASDAQ does, the rest of the market will do because of index funding and cookie cutter mutual funds and retirement plans, because of Ray Dalio's all-weather portfolio. Diversify, but it's really not diversified because this entire market's been manipulated, so everything's kind of intertwined with all this cheap credit and leveraged, and there's more ETFs than stocks. You're not, like, whenever the NASDAQ falls, it's going to take the S&P, the Dow, and bonds are also risky in my opinion because of the massive debt that's been accrued. So the knee-jerk reaction is always to go into the dollar as a safe haven, and then maybe people might be smart enough to figure out that they should probably go into gold. Okay? Now, there are tips, and I'll talk about that. We'll look at a chart of tips. Some people are saying there's a correlation between the 5-year tips and a market correction. I'll also look at the VIX. VIX is a good indicator as well. But let's finish up the NASDAQ here. So, you used to look at the S&P 500 as the barometer to see what will sell off, and the Russell 2000, and I still look at those. But at this point, because of the NASDAQ, because these FANG stocks are so overvalued and there's so much money in them, whenever that cracks, it's really going to crack the rest of the market. The bank stocks have been really weak. Small businesses, mid-tier businesses, domestic in the U.S. have been very weak, which is the Russell 2000. Here's the Russell 2000. The Russell 2000 still hasn't even gotten close to its all-time high. Meanwhile, the NASDAQ's like, shooting to the moon here. It's way past its all-time high. By the way, this is a weekly chart. Every candlestick represents a week that you're looking at. Sorry about that. My fate. Okay. Let me minimize my other camera. I hope you guys sort of saw everything. I mean, you guys can still just listen and get a good idea of what's going on. Alright, I was blocking your view. I'm sorry. Alright, anyways, I'm looking for a decent sized correction. At least 8,300. Now, it's tricky, right? Because everyone kind of knows and feels that Orange Man's probably going to win. I mean, I don't think the other candidate is going to be able to put up a good debate. Let's just say that. All right. So that is positive for the market, but I also feel like the market has definitely priced that in at this point. Anyways, my TDI is telling me we're on the 8 count of the weekly. Well, we're about to hit another 9 count sell off on the weekly, so that's next week. And I mean, it's overextended. These oscillators, the MACD, RSI, momentum indicator, TM squeeze, I mean, they're all overextended. It's been overextended. Let's take a look at the 3-day chart on the NASDAQ here. Yeah, it didn't sell out. I know my heat map was super red, and then the market just went up higher. Okay, this is because of literally Amazon's and Apple's earnings. Here's what's tricky though. Amazon makes sense for better earnings. I don't know about Apple, but that's because the earnings that they reported was from like before the pandemic, right? Now listen, Bezos just sold 3 billion worth of shares. And I feel like they always know when to get out. A lot of CEOs were selling right before this dump. A lot of them. They really were, if you guys remember that. Anyways, the three-day chart, let's look at the oscillators. Super overextended. It needs to correct to the downside. Basically, this move is unsustainable, and as soon as it loses momentum, it's done. The only way is back down. You've ran out of buyers. And emotions super greedy, super over bullish for the past months now. Let's take a look at the daily. Daily's on a 7 count. 2 more days when we get that 9 sell. Also overextended to the upside. Alright, so I am still saying, and you know, another thing I see is people just don't have patience. Like, you guys really need patience. Even in the private group, people are like, look at this mining stock, look at that mining stock, look at this mining stock, look at that. And when I start seeing that, people are way too over emotional and bullish, and they're starting to day trade and speculate with risky small caps. And yeah, it works out it works out in the beginning, but you usually start seeing that at the top. Well, not at the top, but what I'm saying is at a peak before a next correction. Now, the mining stocks are going to go much, much higher in the coming years. But short term, I think this market's going to pull down these mining stocks like it did in March. So we'll see another huge correction. And it's funny because this is funny. I see people tweeting stuff like this. Why is the stock getting killed? Even Schiff, he's like, this doesn't make sense. These mining stocks are still super undervalued. And they're all like freaking out on Twitter. Yeah, but margin calls happen. Margin calls are, most people don't go all in on mining stocks, right? They still hold a lot of tech stocks and other things. And if the NASDAQ has a huge correction, what happens is it forces them to sell everything to pay for their margin calls, their negative equity in their accounts. And then they sell mining stocks as well. Not just that, now they're conditioned to think that when the market falls, mining stocks are going to fall as well, just like they did in March. Which is great. It's a great buying opportunity. In my last video, I said I've already taken profits on my leveraged ETFs and my call options on these mining ETFs, even on the leveraged ETFs. I made a killing, I'm not going to lie, in the past few months. Like, I slayed and I made a killing. Alright, so this will give you guys another possible huge buying opportunity on mining stocks. Now listen, in the grand scheme of things, just want to show you this real quick. This would load. I have a lot of windows open. Well, okay, here are all the ETFs. They've had a good run. These are mining stock ETFs, right? But what am I trying to show you? Not this. Let me find it. I have to find it. I have literally 500 windows open, charts open, because I have to save them, and I was lazy. Okay, here we go. Okay, so I've been showing this for like 2 years or something. The orange line is the price of gold per ounce, right? It's made an all-time high. It's over $2,000. Big deal. Real big deal. Matter of fact, right now it's at 2,083. Like, that's huge, guys. Gold just made an all-time high ever in dollars. Finally. And I said it will, or it might sell off right before it. Alright. So that's a psychological resistance. Okay? Now, if the broader market is due for a sell-off, gold just hit a huge all-time high in a round number of 2,000 psychological resistance. Now, it overshot it by $80 now, the 2,000 mark. It's a perfect time for the banks to smash it. It really is. Along with a broader market sell-off. The S&P, the Dow Jones, NASDAQ, all of them sell off. They're going to use that to smash the metals because that's what happened in March. And margin calls will be there, and then they will start running stops. Okay? Now, people are like, yeah, but what about the short squeeze you were talking about? Well, it already happened. Silver just hit $29 an ounce. That's what I was talking about. My mining stocks went up big time. Now, what Schiff and everyone else, what Schiff is trying to say is, and this is what I was trying to say and have been saying, in the grand scheme of things, in the longer term picture, in the next year, in the next 3 years, this blue line is the GDX. This green line is the GDXJ. The GDX is a large cap, the largest mining stocks in an ETF, a basket of stocks that represent the largest mining companies. The GDXJ is more so, well, it's large and mid-tier mining companies, the GDXJ, okay? Now, there's other ETFs that are way better that we look at that have smaller cap mining companies and other types of mining companies, okay, that outperform the GDX and the GDXJ. Although GDXJ and GDX are good tools to trade, swing trade, I'm not going to lie. I put on call options on GDXJ in March at $12, and it rallied to 30, and GDX around 36 to 44. Anyways, but what I'm trying to say is, okay, so when gold was at its last all-time high around, 1900, GDX was priced at $150. GDX. Well, no, GDX actually was higher. GDX was at $172. GDXJ was at $65. GDXJ right now, with gold at a new record high, is at $28. At its previous high of gold at like 1900, it was at $65. That's how much it's undervalued, 100%. And that's an ETF. The individual mining stocks could easily do another 10x, 20x, whatever, from current prices today. I'm not saying they will short term, I'm saying in the long term. Okay? Now, GDX right now is at $109. At its all-time high, it was at $174. But guys, at gold's all-time high, previously, it was at 1900. It wasn't at 2080. You see, like gold is 180 bucks even higher than its previous all-time high. That's how undervalued these mining stocks are. Super, super undervalued. Super still. And if that doesn't get you excited, what if gold goes to 3,000? What if it goes to 5? What if it goes to 8? What if it goes higher? Because I think it will. Do you understand? Like, people who are sitting on the sidelines and have been watching this play out, and they have money to play with, and are not taking part in these mining stocks, I think you're a fool. I mean, this year alone, I've made more money than ever combined, like all my years. So, I don't know what to tell you guys. Now, for the short term, yes, I'm really hoping that we get a huge market correction in the broader market. We see margin calls again, crazy volatility, and gold, does a nice pullback to 1,800, right? Gold, at least 1,800. Then GDX is gonna pull back as well, build up. Maybe it'll get slammed down to 73 bucks, somewhere around there. GDXJ, falls back all the way down to its prior support area of 22 bucks, right? Let me move this over so you can see it. We see this. And then you get another awesome, awesome buying opportunity. And we do this all over again. Now, I don't think we're going to get that buying opportunity. Like, I don't see these going all the way back down to its March lows. That would be freaking amazing. I don't think we'll get that opportunity. That's like one lifetime thing. But you don't want to miss out on this one if we get it, right? So I have a lot of cash on the sidelines, some fresh powder, ready to go back in and do it all over again. Matter of fact, I'm even short, right? So I'm going to benefit from all of this if we get a nice correction in metals. Especially mining stocks get slammed way harder than the physical metals. And then, so I'm even short some of these mining ETFs. Especially the leveraged ones, because the leveraged ones get hit real hard. All right. And that's what I'm doing. Disclaimer. Consult your licensed financial advisor to see what to do. Do not trade options. Do not trade leverage ETFs. If you seriously don't have like 7 years experience and profitable experience. Also, like, because you need to know position sizing, and you really have to get a good understanding of how timing these things work, and how I always have multiple positions of one trade. So for example, by the way, I like using inverse ETFs instead of outright like naked shorting, because your account could go negative if it goes against you. I would never naked short any of these mining ETFs or mining stocks. Like, shorting mining stocks and mining ETFs is like insane. I would never do it. It's kind of like, it's an example of that. The equivalent would be like naked short Tesla, and and then you get a short squeeze and it goes to the moon, right? All right. So let's digress from that. I have 2 glasses on. All right. Another super interesting thing to look at here is the dollar. Listen, let's take a look at the weekly on the dollar. Okay. It totally broke support. Fell out of my range bound. Right? And it's like hanging by a thread. There's a little bit of support right here. I think the only way they could put a bottom, like they could temporarily buy themselves more time. Because believe me, the Fed doesn't like, they don't really want the dollar to just. They want a weaker one, but in an orderly fashion, not straight. Boom. If that happens, that's really gonna spook the markets. It'll the world as well, in the bond market, and inflation will actually pick up. And what that means is, this is why it would scare the markets if the dollar falls by a lot. Yeah, a weaker dollar will make revenues and the balance sheets of these companies look better on paper, but in reality, people are going to stop buying things. But and by the way, an 80 handle on the DXY is not the same 80 handle from 10 years ago or 5 years ago even. It's much weaker because all fiat currencies around the world have been getting devalued. All I have to do is put gold up on this chart, and you'll see that. But they have to stop this, and the only way I think they can is to let the markets correct. Because if the market corrects, the knee-jerk reaction is to buy the dollar for the short term, for the next few weeks or months, right? And that'll give you a nice little. Instead of this happening, what we'll get is a dead cat bounce on the DXY, right? And probably the 200-week moving average would act as resistance at this point, and then maybe some more sideways action. I don't know. Something like this, maybe. Okay, for the next few months, 6 months, something like that. Actually, that would take us into, like, I don't know, at least halfway into 2021, alright? Don't look at the time on. I'm just drawing. It has nothing to do with the time on the bottom, alright? But at least a dead cat bounce, something, right? And then that would, because if the dollar just starts free falling, the Fed can't print anymore. It can't do any more stimulus because they can't. Because then it will just keep falling, and that's it. The game's up. Then, everyone sees the emperor without its clothes. So they have to let the market correct, so it puts in a bottom to this free falling dollar, and we get a dead cat bounce. All right, let's look at something else important or crucial. Hold on. You know what? Oh, I wish I had it up. Give me a second. It's not loading. Wow. Come on. It's lagging. The computer's just filled with videos. I need to Alright, here we go. I am at 43 minutes. No one's gonna watch this. It is what it is. I should make 5-minute videos and 15-minute videos just to get more subs. But honestly, I feel like the stuff I talk about, if you only want 5-minute, 10-minute, 15-minute videos, you're probably too stupid to understand or to know what's going on. Anyways, you shouldn't be doing this anyways. As this loads, it's not loading. Let's go to another chart while it does. Alright, so here's the VIX. Or this is the VIX-C. Give me a second. This is why I don't go live. Okay. So the VIX was pretty good at predicting the last market correction. Well, it had an awesome spike. You know, there's other ETFs for the VIX that are leveraged, and I bought those, and they did really well in March. Like huge gains, like 10x. Well, with options and stuff like that. But even without, I mean, this went from, we bought it early. It went from $11 to $85, 86. So an 8x, right? Just holding the ETF, not buying call options. If you bought call options, you did like an 800x, 8,000x. No, I don't know. A lot. All right, because you can leverage up 100x if you want. I did do that. I just wish I bought more. For one, the VIX is staying up pretty high. It's still above. It's still at 22. It never revisited its all-time low, while we have all-time highs on the S&P 500, NASDAQ, and all that, right? So that's telling you something. That a lot of people are still skeptical of this rally. Now on the weekly, we're on a 5 count. I get it, but honestly, I don't look at that. You can't really use a lot of indicators on the VIX. But if we go to the daily here, it's a little more. It's telling me something. For one, it hit my blue equilibrium line, and how well did that work out for gold and silver? Really, really well. And that's going to act as support here. And it's technically on the 9 buy right now on the daily. So we could see a nice spike. It depends on the velocity of the correction that we're going to get. Now, a lot of people are betting that the markets are just going to keep going up literally till the day of the election. That's dumb. Why to think that? Okay, this could be a giant bull trap, guys. It really can. For the NASDAQ and the S&P and all that. I mean, even though the NASDAQ's making all-time highs, let's take a look at the Dow Jones. The Dow Jones looks more like, so does the S&P. You know what? I'm not going to look at bonds. This video is already long. I'll talk about the bonds and the tips in my next video. Here's the Dow daily chart. That hasn't made all-time highs. Kind of looks like that's kind of looks like the Russell. Looks just like it actually. Now you can't argue. Yeah, there's a huge cup and handle. There really is. Huge cup and handle. And cup and handles, I love cup and handles. They always shoot the price higher. But what happens right after them? The price falls back down, and sometimes you get a huge correction. Now, but that would take a few more weeks to play out. So I don't know. Like, this is bullish. We have a super bullish pattern on the Dow. Let's take a look at the S&P 500. The thing is the FANG index and NASDAQ are not bullish. They're looking ready to sell off. Let's look at the S&P 500. Give me a second. Okay. See, I already drew the cup and handle on the S&P 500 like weeks ago, or at least a week ago. I did it weeks ago. And it already broke out. The Dow is here versus S&P. So the S&P already broke out, but that is also looking ready for a correction. So these were wrong. These were too early. So let me move my arrows around. I'm not going to leave my arrows. That's dumb. It's just like I was wrong for the past 4 weeks. Whatever. I was too early. But you know, markets stay irrational longer than you can stay liquid. That is very saying that is super true. I just didn't think the markets could do something like this with such bad economic data. Like, I always underestimate how stupid everyone is. Honestly. So here. So I just moved it over now. Alright. Also, if we go to a monthly, I believe there's a huge trend line. No, let's go to the weekly first. Let me zoom out. Well, for one, look at these moving averages. Look at the space between them. They can't stay this far apart for too long. It's going to lose momentum, and they have to come back together again. They have to close these gaps. Also, looking just at the price, even of the S&P 500, there's a gap all the way down to 3,000. Huge gap. It would actually make this bull market stronger for the next 3 to 4 years if we get one. If it returned to that 3,000 and turned it into major support to launch it higher. And I talked about that in my last video. It could even revisit 2,800 and turn this into, like, it would create a major support area, and then if it went back up higher, then it would launch it into just another huge bull market in the next 3 to 4 years if Trump could pull it off with infrastructure or whatever and endless stimulus. But we'll see. I don't know. It's probably what they're planning. Anyways, let's draw. Oh God, there's so many. Oh, here's the line. Okay, here's that so let me move it further. It's broken above it, that huge trend line. But let me make it thicker so you can see it. I know it's hard to see. Here's the lower bound of the trend line. Okay, you see this thick purple line? Okay, every time it tries, it goes all the way back to like 2008. It's a huge channel. I know it doesn't look right. It's probably because I moved it a little bit. I don't know. Something like that. You see this huge channel? Well, every time it gets near it, hits it, or goes a little bit above it, we get a huge correction. I know it's hard to see. Just bear with me. So we're trying to... Let me remove these arrows so you can see it. Okay. By the way, in the weekly, we're also on a 9 sell. So we should get a sell off this starting tomorrow or next week on the S&P 500. And we're trying to break above this since 2008, right? This 12-year or this 12-year channel. We're trying to break above it again, and it never really does. I mean, it does. It can break above it, but it's a false breakout technically, and then we get another correction. That's another indicator for me. Another duck. You know, you line up your ducks, all your indicators, and the more ducks you have, the more likelihood that it's going to happen. Now, listen, guys. With TA and technical analysis, this is important. The news follows the price. The price does not follow the news. Well, what does that mean? Well, usually whenever the news or whenever the price falls, they'll say it's this bad news. But there's bad news every day. There's good news every day. But it's always used as an excuse for the price action, if that makes sense. Now, there are exceptions. Some days there's really big bad news, right? But honestly, the market could ignore the really bad news. We saw that with the pandemic. Like, the market knew about it for like weeks prior to it finally falling. And they even reported it on mainstream, but and then finally the market fell, and then they're like, "Oh yeah, it's the virus." So, good example. That was a great example of that. Now, there are exceptions, right? Missiles start flying all around the world. Yeah, the market's gonna sell off that minute, that day. But even recently, right? What we just saw, that huge explosion, the market ignored it, right? Now, if the market fell that day by like 2,000 points, they would have said that was the reason why. Do you understand? That's why the news follows the price, not the other way around. And it's weird. I know. Let's take a look at the futures real quick. Starting to turn red a little bit, tiny bit, nothing serious. Look at this, silver 29.41, but the silver stocks are selling off. It's kind of funny. Why is that happening? Because people like me are anticipating a market correction, and other people in the gold bulls can't figure that out. All right, so I think I talked about a lot of things. There's this article, China and the Ruskies here are basically de-dollarizing. They're using the dollars less and letting their bonds mature. Here's I know it looks like a funny infographic here, but here's the global world reserve currencies on a timeline. The squares represent them. Portugal, Spain, Netherlands, France. Britain was very long. Spain had it for a while too, in the 1500s, going into the 1600s. The English had it for quite some time. And you know what's a good barometer as well? Your naval fleet. Seriously, whoever owns the seas always ends up having world reserve, because that means militarily and trade wise they're all over, right? And then here's the US. So technically, it's not as long, but I wouldn't bet on this, going out another few decades. I mean, I don't know, you never know, but the amount of debt is just unreal. Of course, there's no one else to replace the U.S., and that doesn't mean anyone will. It just means it's just losing that status, and we're gonna have to pay the bills, inflate away the bills, and start cutting the size of the state, right? Our huge defaults are coming. Something, right? What else? That's pretty much it. Join the private group. All the knowledge you're gonna gain pays for it, and then some, possibly. Can't make any promises. It's $10 a month. I mean, you can't beat that. The initial price is more, but that's because you get a report, and that's like the entry fee. And then there's updates and a bunch more in the private group that I've been adding for the past 2 years. If you can't figure out how to get into the private group, but you purchase the report, I really don't know what to tell you, man. You were given directions, like it was 3-4 sentences long. 99% of people could follow those directions, and they get in the group. I don't know. Some people can't follow directions. If you the Patreon isn't the private group. That's just to pay the $10. If you made it that far, you have to you have to respond to my messages. And then you get the links. All you have to do is provide 2 things, not 1, 2. And then you get the links and you're in the private group. Like it's really weird that some people can't follow directions or just don't understand or whatever. So that is what it is. And if you can't get past that, you probably shouldn't be investing. What else? I feel like I'm missing a big topic. Probably am. I always forget something when I make these videos, and then right after I'm done making it, I'm like, crap. I really needed to share that. That was good information. Oh, let's talk about Apple. I talked about Apple in my last video. I mean, it's a few dollars away from a 2 trillion. That's with a T. 2 trillion market cap. Do you know how insane that is? How insane that is. Their revenue, look at it. Look at their balance sheet. How much money do they even make a year? It doesn't make any sense. It really doesn't. It just makes no sense. It's like my company makes I don't know. It's like my business makes like 100,000 a year, but people are valuing it at 200 million. That's kind of how I look at it. There's a lot of countries not worth as much as this one stock. Matter of fact, all the FANG stocks together is more than 7 trillion. That's like 1/3 of the U.S. economy. This is unreal. Unreal. So, I don't know what to say. There's going to be books written about today and everything going on. Maybe I should write a book once we get over this in like 5 years or something, or 10 years. But it's been a wild ride. Smash them likes. Please share my videos. It's the only way my channel grows. What else? Smash some likes. Join the private groups. Join the news group. There's a bunch of free groups. There's not much. I don't post much in there. Private group is where all the action is, but I do post a lot in the free newsroom. So take advantage of that. Alright guys, till next time.